everybody? We are here. Welcome to Meeting of the Minds, episode 2. I am James, and we have Andrew and Greg here as well. And this is the official episode 2. We had some minor technical difficulties, but we're here and we're ready to go. And we just finished up U.S. election, and I'm glad it's over and people can stop yelling, and we can kind of just get on with life. And here's to making some good financial decisions over the next 4 years. And let's just jump right into it. So last episode, October 18th, I believe it was, we made some stock picks. So we'll see how those turned out. I picked Redfin, and since then we lost a little bit, down about 5%. So my pick didn't do too well, but I'm confident about the future. And Greg went with Waste Management, which since then is up 3%. Pretty good, Greg. And then Andrew went with Newmount Gold Company, which is down a wee 22%. So gonna have to call Greg the winner there for that stock pick. Going conservative with the Waste Management, with that 3% taking the win. Congrats, Greg.
Thank you. Yeah, I picked that just because insider knowledge. They bought out Stericycle, which was my previous employer, and it's. To
be fair, it wasn't actually inside information.
It wasn't inside information. It's just you could look it up on LinkedIn or just the general news. That's a huge acquisition, just because Stericycle is a $5 billion company. And Waste Management strategically needed waste out of hospitals in a more cohesive and economic way. And they already had contracts with all these hospitals throughout the country. And why not just buy out a company that essentially gets out all the needles and hazardous waste out of the hospital and pharmaceutical waste. So
they bought out. That's their competitor, right? So they're buying out.
Yeah, it's not the direct competitor, but it's a market that is the next in line for them to buy out. So that was my logic behind picking Waste Management. And from just a stock pick perspective, I mean, if you look at the stock, Vanguard, BlackRock, they all own it. It's 98%. So it's one of the I think one of the most conservative plays you can choose for a stock pick. So we'll move on to the next part.
People are always going to have trash guys.
Yeah, of course.
Hashtag not financial advice.
Yeah, and if you see and it's really them and Republic Services. And like James said, people always have trash. It's a business that's not going to go away. And if they can dominate and leverage their debt and just dominate that market, that's a great stock because their dividends are going to increase in the future. So that was my reasoning behind that stock pick for that 1 month time frame.
Interesting.
Cool. Congrats on a good pick. With that, do you want to get into some policies on the election?
Yeah, so let's jump into that, guys.
I was just gonna change this decision. How 2024? How is this gonna affect the market and our wallets?
Well, yeah. So Trump, as everybody probably knows, he mentioned trying to fight inflation. So that's one of his main policies, and he's gonna do that. Essentially, number one is to drill, baby, drill. So increase drilling for oil and natural gas, that'll lower inflation. And then he also mentioned to increase the take-home pay for the consumer is to start setting tariffs up on exports, which will then lead to companies increasing employment in factories in the U.S. So with that said, what do you guys think about Trump's oil, natural gas increase? When do you think that'll happen? When do you think it'll eventually flow into the consumer? Where you'll then see consumer price index start to lower, PPI, which is producer price index, lower, and then these cost savings get passed on to the consumer. What do you guys think?
Yeah, I like how he's going about it from the supply standpoint. As opposed to, we kind of did what we could with the demand, trying to get the demand down, hiking those interest rates up. Now we just need to make more stuff, increase that supply, specifically the supply of energy. So because with the cost of energy going down, everything else goes down. And then to your point about the tariffs, like I know some, I always like to look at both sides of the equation because what's that saying? The truth usually lies somewhere in the middle. So the left political stance is that, well, tariffs increase inflation because that cost inevitably gets passed on to the consumer. Now, to be clear, a tariff literally by definition is a tax that a foreign country has to pay on their goods that they import. But I guess the argument against that is, well, they're going to try to raise the price to offset that extra cost to them, and the consumer's going to end up paying it.
Yeah. But
on the flip side of that argument, it's going to make American products more competitive. So even if say the Chinese raise their price on some of their products shipping into us, then an American buyer is going to say, well, maybe I can buy this American-made one now that's better quality for the same price. And it's going to persuade people to buy that more instead of I say Chinese because a lot of these products are from China and copyright infringement, all that stuff. The consumer's gonna have a choice now to like opt out of that for better quality, and that would also incentivize the Chinese product to try to keep their prices low to stay competitive too. And I think it's important to mention that when Trump implemented these tariffs back a few years ago, there was virtually no inflation, by historical standards. So I'm not too worried about that. I think he's making some of the right moves here.
And if you look at it, James made some good points there. If you look at it from a corporate standpoint, tariffs essentially will give an ultimatum to the corporation. Do you want to build a factory in a foreign country, pay the tariff to then sell to the U.S. consumer, or essentially streamline it, just build the plant in the U.S., hire American workers to then avoid that tariff. And then that's less transportation costs. If it's made in America, probably a higher quality product. So I think either way, it's good for America. And if that company does decide to build in China, to James' point, and ship it in and pay the tariff, then the U.S. essentially collects a tax off that tariff that can go directly into the U.S. Treasury to pay down debt, give tax breaks or whatnot. And to Trump's point, or I think both of you guys see where he's going with this, is to eventually fund the U.S. government with tariffs, and then cut the income tax.
To get to the history aspect of it, was McKinley the first one that had the tariffs implemented?
So the king of tariffs was, yes, William McKinley in the late 1800s, going into the 1900s, and maybe the reason why the powers that be assassinated him. But he had a tariff. He had tariffs on any international imports coming in. U.S. had a ton of money. They didn't know what to do with it. They were probably built with federal programs, building railroads back then in the late 1800s. So it worked out very well. And then going forward, it all fell apart. They got rid of the tariff. They implemented an income tax in 1913, and then the Federal Reserve opened up during that same 1913 to 1917.
And they said it was going to be temporary, right? The federal income tax.
They also said it was going to be temporary, which to tax the rich. And
look at that.
And that, as everybody can see, our viewers here could probably see.
Here we are, 100 years later.
100 years later,
we're still paying a 35 plus income tax.
Everyone, even a 15-year-old, working at fast food is going to be paying it.
Yeah,
that's crazy.
And then, okay, so I know we're just talking a lot about the consumer here. If you watch our episode 2, that's posted on audio, I went over I went over
The original episode.
The original
2.
episode 2.
This is episode 2A, the
This
one
is
that
2A.
made it to video.
This is version 2.
This is
the official.
This is the private. There's a private episode 2.
To all viewers, we'll post the episodes on Spotify. This is technically episode version 2.
Now going into
one quick thing I just want to mention that was I want to mention that you brought up taxes, which I love this proposal that I saw the other day. Trump wants to lower taxes for like a corporate tax even further than it is now if they build a product in America. So he's incentivizing, he's saying, if you actually build your product in America, we're going to lower the taxes even more. I love that policy. I think it's great to build jobs and just work towards bringing the manufacturing back to America. So I'm excited to see that come to fruition there.
Now, to James's point, Andrew, what % of the American economy represents manufacturing, and what percentage represents consumers?
Right, it's a great question. Well, so the U.S. economy, right, is measured by GDP. I think the U.S. is at 32 trillion a year. It's some very large amount. It might be less than that. But what makes up that GDP is 30% of the 30% of the economy is manufacturing based. And then the remaining 70 is consumer based, which is very important.
Guys, that's huge. 70% is the consumer. That's people working at Starbucks and Dunkin' Donuts.
So, yes, that's true. 70% is the consumer, and a great way to look at that information and gather a macro standpoint or macro view of the economy and whether or not the consumer is doing well or not, which is 70% of the economy, is to look at a very important leading indicator that is the University of Michigan Consumer Sentiment Index. This index will come out with a percentage and a point total. If that point total is 85 or above, that essentially represents a 3% GDP growth.
3% GDP growth.
If it's below 70, technically you're in a recession and the consumer is not spending. So when you're creating your stock analysis and stock picks and ideas, take a look at that leading indicator, which is the University of Michigan Consumer Sentiment Index.
Let's get into vehicle sales and how the election is going to affect that, and get into like a stock pick that we can analyze.
Yeah, so another great leading indicator is U.S. total vehicle sales. This is an indicator that comes out every month. You can find it on tradingeconomics.com and a bunch of other websites, but this number has essentially been trending post-COVID at 15.5 million auto sales per month. Pre-COVID it was about 17 million, but that indicator is very important to watch because every vehicle sale essentially goes into the GDP total at the end of the quarter, end of the year, and it's a high dollar value amount, 40K, 35K per vehicle. And it's a great gauge of the consumer. So with that said, James and Greg can talk about Trump's auto policies, how he wants to bring back manufacturing into Michigan, and then essentially increase domestic production.
Yeah, to Andrew's point, I think a lot of like the business and automobile sales is the parts aspect of it. So I think a lot of I talked to a former manager and he said most of the manufacturing and automotive parts and stuff actually comes from Mexico. So with Trump winning, and if he implements a strict tariff, which he said 25%, a lot of those jobs are going to be coming back to say Texas, Oklahoma, Louisiana. And those are high value items. Automotive parts are high margin, high profit margin items. So I think that's going to be, it's going to represent an increase in just used vehicles and new vehicle sales from a domestic standpoint. So I think like with like changing and volatility with elections, you can capitalize this from an investor because you can almost like understand the logistics of it and get ahead of it and make your bets or your stock picks from there. You can make these decent profit
Now,
margins.
Greg,
So do you think maybe like companies like GM, Tesla, American car companies might benefit from that?
I think American car companies, I mean, if we look at the value of Ford, I mean, it's really rock bottom, like 7 or 8, or Chevy or GM. I think from that standpoint, if they can create those American jobs, get the economy rolling, I think more people domestically, we have 350 million people are going to buy trucks at a reasonable rate, just creating those high profit margin jobs. Not high profit margin jobs, but like jobs that are just sustain families and people just buying more trucks in general.
That's a good point. You made it. Mexico is a huge player in the automobile manufacturing industry. Toyota actually manufactures most of their vehicles in Mexico and ships them into the U.S.
And Andrew knows this because he
Okay.
works in an automobile leasing company, so that's the insight.
What Greg did not bring up was Detroit and Michigan. Trump bringing back. That's essentially the focus point of where he wants to funnel the domestic production to. So you'll see increased production at the Ford plant, Dearborn, Michigan. GM is probably in Ohio and Indiana, other states. So you're going to see production increase there, and that's kind of where he's going to focus his mindset into.
What's your?
I mean, I honestly didn't research too far into the whole auto thing, but I know I heard Trump talking about how, and I mean, it's true how we, import so many cars from Japan and Germany, like Volkswagen, BMW, Honda, Toyota, and then the Korean cars, you get the Hyundai and the Kia, and it's like so we're taking all these cars in, who's taking our cars because of the current international tariff laws and stuff. We're kind of getting screwed in this game. So if we can kind of tip the scale a little bit and get some more of our cars out there and make ourselves more competitive, I mean. What's
to
bad
James's
about
point, what's bad about that? And to James's point, if Chevy's competitive with, say, Toyota, say in Germany or Japan, that's a win. That's a win for the United States. I mean, I don't see.
Well, actually, how many Fords do you see in Frankfurt, Germany? How many Chevys do you see in Berlin? In the EU, you don't see any domestic OEM car brand, models or manufacturers in those industries.
Probably
in
Tesla
those countries,
one, right?
Maybe Tesla, but it's primarily Volkswagen, Fiat, maybe probably Maserati for the lower tier luxury, you could say, even Ferrari. But to James's point, if you can lower those tariffs, put tariffs on those EU countries, they may consider lowering the tariffs on the U.S. imports coming into their country, and there's a level playing ground for the U.S. OEMs to then sell into the EU. So.
Yeah, and this is valuable insight because you can almost time the market, and I think you're ahead of it right now. If you place a bet in Ford, Chevy, and really understand the logistics of it, there's value to be captured in that. If you put a big bet, say $20K on Ford right now or Chevy,
it's a little too much detail.
It's a little bit. I mean, that position's a little bit too much, but I wouldn't overlook the domestic car production companies based on the election results, which is what this episode's about.
We could have a whole episode on, how much should you invest in a stock or that really depends on your personal situation and what you're willing to risk. I mean, there's a lot of people out there starting out, just starting out with a few $100s. So maybe, that's going to be your position size, and that's totally fine. That's totally fine. You gotta, you build up, right?
Yeah.
But yeah, to your point, some of these companies are beat up pretty good.
Let's look at Ford, you guys. I mean, they're beat up pretty bad, but if we look at it from a technical perspective, James has some experience with this. We could give you a quick snapshot of what we could see right now and in the future with this company.
Yeah, let's see Ford. I mean, just looking at the technicals, the chart alone, it's on the lower end of the trading range. Could be a good buying opportunity. If we look at the financials here, let's see, net income on an annual basis. It looks like over the last several years, it's trending up very slowly, but it is kind of up and down, and more in that down range right now, like we were saying. So, at a price of $11 a share, that could very well be a bargain that, at the height of that 2021 insanity, it went like over $20. So,
yeah.
I mean, we're talking 100% upside potential if you're willing to wait, a few years to, like 2 to 3 years to watch this play out.
Yep. And for the audience, for some insight, they're doing well in their half-ton trucks. They hit their target goal or above their target goal of their half-ton to a ton trucks. So, and they leverage they realize that we're not going to like make profit margins on their sedan market, but their half-ton to one-ton trucks at higher profit margins. So they made a lot of manufacturing efforts to focus on that specific niche market, which is where most of their profit comes from.
Yeah, when Greg says half-ton trucks, that would be the equivalent of a Ford F-150. That would be a half-ton truck. A 3/4 ton truck would be an F-250.
Yeah.
And then on the GM side, that would be a Chevy Silverado 1500, which is a half-ton, and then a 3/4 ton would be a Silverado 2500.
What do you guys think about the electric trucks? Would you buy an electric Ford or Chevy?
That's a great question. Right now, I'd buy a hybrid. Only electric truck I would buy would probably be the Tesla electric truck, just because it's from the performance aspect. But from these other companies, they're kind of lagging behind. So I'd rather wait and just get a hybrid.
Right, like Tesla's been doing the EV game for a while now.
They've been
I
doing
kind of
it.
agree. That's the only EV I would buy.
That's the only EV I would buy, and I would overspend on that because I think one of their Tesla Cybertrucks are like 110, 120K, which is. But if you think about it, the value in that, and the performance aspect, it's beating Maseratis and like sports cars on a drag race. So it's like
I've seen them beat like Lamborghinis. V12.
V12s. So it's like, if you're gonna spend on an electric truck, just get a Cybertruck and wait until Ford and Chevy they all catch up.
I mean, me personally, I don't like buying the first generation of any product. Really, I mean, like I feel like the second generation Cybertruck is going to be really interesting when you work out all the kinks.
Well, you know what? I would consider buying the Ford F-150 Lightning. That was a very popular truck a couple years ago. If I was gonna pick a certain truck to buy, it would definitely be the F-150 Lightning from Ford.
From Ford, yeah.
But
to answer James's question, I think the Ford Maverick's good. It's a hybrid, light truck, 4-foot bed. It's great for like fuel economy.
It's 5.5 foot.
5.5 foot.
4 foot, 4.5 foot. Yeah.
I'm currently driving a 2012 F-150, and I like it just fine. I'm gonna keep it for a while. Keep that V8.
And the EVs are great, but you know what? For towing capacity and battery life. The truck's just so heavy and the batteries takes up so much room. You're almost better with either gas or diesel for trucks.
At this point.
And supposedly electric vehicles in general will eat up the tires a lot more. So it's more emissions, it's more tires you're going through because the acceleration is that much faster. You're going to burn through your tires.
Which is, not to get too far off topic, but reminds me of a statistic that I heard one time is that, and I don't know if this is true, but I'd have to look more into it, but I believe Elon said it himself that most of the pollution from cars actually doesn't even come from the emissions. It actually comes from the brake dust and like from the wheels and the tires.
Yeah.
And that's all going into the air, and that's their whether or not it's EV or gas, maybe even more so EV, like you said, because the bigger weight. So who knows? We got lots of new technologies probably coming out in the future, and we're gonna figure this whole thing out. But just another fun fact.
Well, maybe in another episode we'll go through the whole logistical supply chain of how an EV is created, the battery's created, and eventually a final product of the vehicle, compared to a gas, or they call them ICE, internal combustion engine vehicles.
ICE.
I don't know about you guys. If I had the choice of any vehicle, I definitely choose a Ferrari. For the audience here, great book, Enzo Ferrari, autobiography by
Hey, we can clip that.
Luca Del Monte. This is a great book to read. Brings you through the whole history of Ferrari, how he created the company, and whatnot.
We'll throw a link in the description there for you.
We'll throw a link in the description to Ferrari's website, and join us in next episode, episode 3. We'll talk. We'll give you guys more insight about the financial markets, and like I said, we might go into the car industry and just focus on that with you guys and give you some.
Well, before we end the episode, Greg, let's go into our stock picks for our next session.
Oh yeah, don't want to forget that.
You don't want to forget that, and then see how those perform. So bring that right up right now for the audience.
Well, maybe I'll go first here. I'm gonna go with Match, symbol MTCH. They own most of the big dating websites. You get the Hinge, Tinder, Plenty of Fish, OkCupid, blah blah blah. Pretty much everything except Bumble they own. And I don't know. I think I kind of like what Trump said about how we're going to enter into the golden age of America right now. I like these positive vibes about lower inflation and more growth, more real economy growth. And I think there's a lot of people that have kind of been like cooped up, feeling lonely after this whole COVID thing. And I'm just feeling positive people are going to get back out there and get back into the dating scene too. And that's how people are doing this now is online and talking about deep value. This stock Match in 2021 hit $182. It's currently after earnings here in the after hours at $33 a share. So there could be some huge potential value there. It looks like it's hit rock bottom. So a little risky bet, but I am going with Match.
All right. That's a good stock analysis. I'm going to go with Palantir. It's up 170% year to date. It's the reason why is because it's focused on AI and software with big contracts with the Department of Defense and the military. It's focused on like surveillance and large learning models to filter through data online. And if you got these big contracts with the Department of Defense, that's a layup trade to buy. The stock was sitting at $17 per share for like literally 3 years, and I was looking at it. I never bought it. I got into some other AI stocks, but this one's a lucrative one, and it shot up from, like I said, 170% year to date. It's focused on AI within large government sectors. So that's my next stock pick. I'm projecting it's going to hit 70 next time we speak. So that's my stock pick. What's yours, Andrew?
My stock pick, just mentioned a few minutes ago, is Ferrari, ticker RACE, race. This is a strong pick for 3 reasons. Great, strong fundamental growth. It's got quarterly revenue growth of 6.5%, which is very strong in this tough economy, even for the rich people. It's got quarterly earnings growth of 17.7%. And the kicker, which makes this company extremely profitable, is its operating cash flow and, most importantly, its profit margin of 22.11%. So this company has great brand recognition. It's price elastic, so no matter what they charge, the consumer is willing to pay that higher price to essentially buy that higher tier
Yeah.
product. Just like your girlfriend might want to buy the Louis Vuitton bag that's probably made in China for $100 and it's sold for $2,000. Same thing with Ferrari. Probably created for $50K, and the average Ferrari is about $250,000. $250,000 per vehicle. So great company. The rich usually get richer.
Yeah.
They've got great international growth and presence, so they're gonna draw sales from China,
Yeah.
Asia market, the European market, and the U.S. market. And again, it's got that brand recognition, almost similar to like a Rolex, where everybody knows the brand.
Yeah, and don't forget about the halo effect of Trump winning the election. People more apt about buying more expensive luxuries like the Ferraris of the world in other countries, because the United States is the most powerful country. If people think Trump won the election, they gravitate to, you know what, I can spend my money on a Ferrari and just be more not frugal, be more open about what their purchases are. So.
With that said,
we're
going to end this episode. I highly would prefer that the audience listen to episode 2.0. This is episode 2.1 to review the economic leading indicators I went through in the previous episode. It's all audio.
Yeah.
Very important to generating stock picking ideas, having a general sense of macroeconomics and where the market is going, whether you want to be long or short. So tune in for our next episode, and
we're going to be on Spotify, and we're going to post all the audio. So once I set up the Spotify account, please sign in, and
YouTube, everywhere. We'll get there.
We'll get to the YouTube.
Stay safe, everyone.